Hi everyone, and welcome to ABG Fireside Chat. My name is Nikola Kalinowski, and I'm an equity research analyst here at ABG. With us today, we have B3 Consulting Group's CEO Martin Stenström, and we'll discuss B3 a little bit in more detail today. So with that said, Martin, you've been CEO for about half a year now, and prior to that, you were head of a business area from 2018. Could you share with us a little bit your view on B3, both as a new CEO and as a former business area head?
Yeah, I will do that. Thank you. Indeed, time flies. It's a lot of the time since I started here in B3, and now almost 6 months in the CIO. Yeah, I think that B3 is a remarkable company and very attractive to both employees and customers. But we hadn't been good enough in the downturn of the business the last couple of quarters. But when you say that, you had to be in mind that we had a tremendous results a couple of quarters before. So I'm quite sure that we will be out stronger in the other end.
Yeah, yeah. And I think just to tie into that, the quarters have been quite challenging.
Yes.
The recent quarters have been quite challenging for everybody in the IT consulting business. Namely, the utilization rates dropped during both 23 and 24. How have you managed dropping utilization rates during this period?
Yeah, it's been a big trouble last year, but in this year we have had a good development with the utilization rate. We had 4.3% points better in Q2 than Q1, and we have had month by month growing trend with better utilization rates.
Yeah, and I think if we were to look in terms of improvement, I mean, have you seen any changes in terms of the direction of the utilization rates? If we look more on a broader basis, and what do you think is required for utilization rates to normalize, if you will?
Yeah, I think that, of course, we think that we are doing good in this, but I think that the main reason is that now we have a positive trend all over the business. And for us to get back to the former very much higher numbers, we need that the market is going back to a little bit better. So we need some help from the market.
Yeah, so maybe a stronger general demand from the entire market.
Yeah.
And I think if we look in terms of net recruitment, I think if you look broadly among IT consultants, net recruitment has trended in a negative way.
Yes.
Obviously, this trend cannot continue forever. What do you think would be required also on that topic for the trend to turn positive?
Yeah, the demand for consultants, of course, and I think that, but I think that many of my competitors now are thinking about expanding and trying to get in more people. So I think that we are in the start for a better or a higher net recruitment phase. When I don't know, but I think that everybody's thinking of that. Now we have had the bottom, we will see it's getting better.
Yeah, so it looks like maybe the bottom has been reached in terms of net recruitment, hopefully.
We think so, and we hope so.
And in terms of just negative net recruitment, obviously sounds pessimistic, but maybe there is some benefit to that for the entire industry and maybe for a player such as B3. Can you mention some of the upsides from this?
Yeah, of course, there are big upside. There are many more people to the contact to get them to assign to us. So it was easier to find scarce competencies that was very hard to find before. Now it's possible, but of course this will not be in the long run. Everybody will have the same getting more we want to recruit more people, so we had to be very attractive on the employer market. So we are now planning to make bigger effort to be a great employer for the future.
That sounds very reasonable. And I think just to add some context in terms of B3, you have had some negative net recruitment, but it has also been affecting the staff that maybe didn't have the highest utilization rate. So it has been selective, one could say, of course. And I think another topic is, of course, hourly prices for IT consultants. In general, they are quite, I guess, cyclical and based on the general demand. where would you see that B3 has pricing power, and where do you think that you could improve the pricing power, perhaps through a better offering or something like that?
Yeah, I think that of course, it's very much market driven. When there's high demand, it's easier to get better paid, and we are a lot of experienced consultants and a lot of consultants with very high expertise, and where we see that we can have better prices in typical AI, cloud computing, and security. But I think that's the same for the whole sector.
Yeah, I think so too. Yeah. So for as you mentioned previously, the scarce talents, those tend to pay off, so to speak.
Yeah,
that's where you can find the pricing power. Structurally, B3 has gone through some changes. You've acquired Webstep's Swedish operations.
Yes.
And then a stake in B3 Poland, which allows you to consolidate that entity. And I think on this M&A topic, if we start with Webstep, could you perhaps explain the rationale for the acquisition and perhaps what you intend to do with it?
Yeah, Webstep for us is like buying a cousin. We are very familiar, and we are very the same company, and it strengthens us mainly in the system development area, both in Stockholm and in other regions. So we think that this is a perfect match. Of course, we know that Webstep Sweden hasn't had the best profitability, but we think that we can fix that together with them. And now we will make that. We will make an integration plan that will help us to do that.
Yeah, and it's maybe worth mentioning also that B3 has a couple of subsidiaries within the group that are similar to Webstep's operation. So you have the recipe for success for how to manage such a company.
Yeah, exactly.
And then if we look into B3 Poland, you acquired a stake that allows you to consolidate the business. What sort of potential do you see in the Polish business, which is a little bit larger than Webstep?
Yeah, it's very interesting, B3 Poland.
Yeah.
As you know, it was a startup, and now we gain majority in the company. They have made a tremendous travel journey with this company, and now is operating in a very, very expensive market. The market in Poland had turned, and they are a very expensive, one of the biggest market in Europe, I think, fastest growing. So we think that we can have this as a hub to make a lot of more profitability and growth in Poland and maybe outside Poland. So we think that is a very, very key element to B3 Group in the future.
Yeah, and financially it looks very exciting because it's a fast-growing company and it has quite a high margin as well.
Yeah.
So that's a very impressive
business.
And
just because they have built a very operational, efficient model, I think that they can have higher margin than the other competitors in Poland. Just for that.
That's obviously very attractive for an IT consultant. And then the final question on acquisitions and M&A. Do you foresee some additional integration work that has to be done with respect to Webstep, as we mentioned, and then maybe B3 Poland?
Yeah, we start with B3 Poland. We don't see that we need to do any more integration with them. I think that they just had to continue with the plans and go on with the plan they want to do for themselves. Webstep, of course, a different story. We need to make them integrated in Swedish, just so that we have a couple of other companies with the same business model. So we need to integrate them and make this better together.
Yeah, that sounds very fair. And I think finally, just to wrap up, if you could just tell us, what your operating priorities are for the rest of 24, and then maybe a little bit about your ambitions for 25 as well. I think that would be helpful as a wrap up.
Yeah, for the 24 I have three main topics. It's to continue be in cost control. Maybe I didn't mention that, but we have launched two different cost incentive, one for the mother company and one for the subsidiaries. The mother company is more or less done, but the subsidiaries we still had to see that will get effect. So this is very important. And then we have made a lot of investment in sales, and we think that we have to sell more and better. That we are working with a lot to get more effective at the customer side. And the third is the future with the recruitment. Now we need to be preferred to have a higher recruitment and be a higher our employer brand and be the first in mind when the market turns.
Yeah.
And for 25, I think there's more. I think that we can put the cost side behind us, and then we can going for the sales and recruitment, and maybe some more startups and funny things in the future.
So it sounds like B3 is more lean and mean now, and then in 25, as you mentioned, maybe ready for accelerated growth. It sounds like
we hope like that. We hope
so do I. Wonderful. Well, thank you, Martin, for this interview, and thank you to everybody else for listening.
Thank you very much for having me here.